I want to share a strategy development session with you today in Tradestation. I'm going to show you using EasyLanguage, and this is the E-mini S&P. So one of the things that I do, I spend a lot of time studying the market, scalping it, testing ideas all day, and I do this for my trading systems, so for my trading. And I noticed today, and you've probably noticed this before, at 11:30 Eastern Time, the market may turn around. It may start to rally at 11:30. And what happens at 11:30? Europe closes, and so it's kind of a psychological thing. We only when Europe and Asia open, we focus on maybe news coming out of Asia or Europe. And in the past, when the news has been bad in Europe, the U.S. markets may turn around right at 11:30 because Europe's closed. And so that bad news may still have an effect on the market the next day, but for some reason the psychology has been at 11:30 time to buy the market if it's down, and so you'll see that. Does this work? I'm going to show you the EasyLanguage code for you, and we want to ask the question: does this really work? Is this something simple that's really that tradable? And so that's what the question we're going to answer today. We're going to show you in EasyLanguage how to test that, how to express that, and how easy this is. And here is the code. If time is equal to 11:30 and my computer's on Eastern Standard Time and the chart is set to local time, it's .d session, so it's day session only, data 5 minutes. The session is from 8:30 to 3:15 exchange time, but on my computer it'll be 9:30 to 4:15. So if time is equal to 11:30, then buy next bar at the market. Set stop loss 2000. If time is equal to 1610, that's the last bar of the second to the last bar of the day. So if the time is 1610, we sell at the open of the last bar. 5 minutes left in the session, we sell. So that is the very basic setup. Let's take a look at the results for this strategy. Is it profitable the last 2 years? And in fact, it is profitable. Not a great strategy. What can we do to improve this strategy? Is there anything simple we can do just based on this approach? And so one of the things you'll notice, I use a $2,000 stop loss. Why did I do that? I'm going to take out the stop loss. This is a comment. This comments it out. I re-verify it. And now we have no stop loss. No stop loss with this strategy. What does this look like? I like to go to the trade graph and look at the maximum adverse excursion. And you'll see at $2,000, you give up. If you put a stop loss in at $2,000, this number right down here, point that out to you right here. It's $2,000. There's $1,000. This is how far it goes against you and how much it goes for you. And the red triangles, upside down triangles, represent losing trades, and the green right side up triangles represent winning trades. And so if you draw a line at 2000, there's only 2 winning trades you miss. And so watch what happens to this when I set the stop loss at 2000. It's a large stop loss, but we're just keeping this loosely parameterized, not optimizing it. And you'll see, no more losses past 2000. So here are the results. And so what else can we do? This isn't really that good of a strategy. We noticed this, we tested this. We need something a little better than this to trade in real time with real money. Average trade profit is too low at 44.61. What can we do? Well, we talked about the concept that it's turning around. The market is down and it's turning around. So what would we say? We would say, and the close of the current bar is less than the daily close. Close D gives you the close of one of this time frame right here. So we're talking about the close right here and versus the close of this bar. So it's down on the day and it's 11:30. Let's see, let's verify this, see if that helps. So your average trade profit goes up, but it's still not that great. The equity curve is good since the Fed started printing, increased their money printing during the pandemic. Then it works well, but it's still not tradable. Do we have a pattern here or not? So let's think. Let's think about this. What could we do? We're talking about buying a market that's down, and we know that many days the market can be down in a big way, and we really want to step in there and catch this falling knife. when it's down this far. Last Friday and this Monday would not have been a good time to do that. So what if we buy it when it's down, but we make sure that it's down less than 1%. And so the close of the current bar is greater than 0.99 times close D of yesterday. So we're not down 1% yet. We're down, but we're not down 1%. We're down on the day. It's 11:30. Let's see if we can improve the strategy by adding this rule. So, absolutely. Now we have a strategy for the last 2 years that's very tradable. $200 average trade profit, 54.8750 drawdown, and you see that it really kicks in. And let's see, right here it's doing well, and then you have the pandemic somewhere in here, and so you have a lot of down 1% days, so there's not a lot of trades in here. But since the pandemic, right in here, this strategy has really done well. So we have to wonder if it's done well historically. But let's first look at the stop loss. Let's remove the stop loss again, and then look at the maximum adverse excursion. Can we improve it? The strategy does well without even a stop loss. We're getting out at the end of the day. Let's look at the maximum adverse excursion. So we could dial this into maybe 1,000 or 1,500, or maybe make the stop loss smaller. Let's just try 1,000. Let's look at the performance summary, like this. And the first two numbers I always notice are net profit as a percentage of drawdown and average trade profit. So when I change the stop loss, how will those two numbers change? Let's go with the original $2,000 stop loss, 565 and 200. $603 and 187. So you improve your net profit as a percentage of drawdown a little bit. You decrease your average trade profit a little bit. What if we say 800? Let's just try 800. 640 and 176. So you increase the net profit as a percentage of drawdown. Your average trade profit goes down a little bit more. That's a huge average trade profit, by the way, for a day trade strategy. So now we've developed a pretty good strategy using a simple pattern over the last 2 years. The real test will be now, does this hold up long term? And let's test back 12 years. So the total net profit goes up a little bit, but the drawdown does too. 13,000, not too bad. This average trade profit is just too low though. Too low, so you'll have to do some more work on that. You'll also notice that the last 2 years it's done well. It's done really well since the Fed printed money. And so when you have a really strong trend, 11:30 could be the time to buy the market. There's other ways you could potentially develop this strategy, improve this strategy. I wanted to share that with you today. I hope you found it useful. Be sure to comment or ask any questions below this video. Wanted to share my methodology for developing simple trading systems in Tradestation 10.